the price of silver per ounce has remained slightly above $23 after a recent decline of nearly 4% over the past week. However, looking at the data from the past 6 months, silver has actually seen a 6% increase against the US dollar. Despite some setbacks in the valuation of precious metals, market experts are optimistic about the performance of silver and gold in 2023 and beyond. A report from Citigroup highlights their analysts' projection that silver will reach $30 within the next 6 to 12 months. Citigroup's market strategists state that they believe the recent price weakness presents a favorable opportunity for dip buying, reiterating their call for silver to reach $30 per ounce over the next 6 to 12 months. They attribute this prediction to the anticipated decline in U.S. growth and the potential stagnation of emerging markets. The financial specialists at Citigroup are not the only ones expressing optimism towards precious metals. Last month, a commodity strategist from Bank of America, BOFA, suggested that gold could surge to $2,500 per ounce this year. BOFA analysts also indicated that reduced mining supplies might contribute to potential gains for silver. Global investment bank UBS predicts a record-breaking high for gold this year, and other commodity strategists have hinted at substantial gains for both gold and silver due to the recent banking crisis. In Citigroup's latest report on silver, their analysts declared that silver would rally in anticipation of the expected fall in U.S. interest rates and real yields, which usually accompany a rollover in U.S. growth. Citigroup had previously mentioned the possibility of silver reaching the $30 range, stating that it could even hit $34 per ounce within 6 to 12 months. The most recent evaluation from Citigroup in May suggests that weaker competition from other asset classes should also support silver pricing as markets increasingly factor in U.S. recession risks. Currently priced just above $23 per ounce, silver would require a boost of over 30% to reach Citigroup's projected price target. There are additional bullish signs for silver that were not mentioned in Citigroup's analysis. One such indicator is the silver-gold ratio, which currently sits at just over 83 to 1. This means it takes more than 83 ounces of silver to buy 1 ounce of gold. In comparison, the average ratio in the modern era has been between 40 to 1 and 50 to 1, and historically, the ratio has always returned to that mean. When it does so with significant momentum. In 2011, the ratio fell to 30 to 1, and in 1979, it even dropped below 20 to 1. Throughout history, when the spread becomes this wide, silver tends to outperform gold and experiences a substantial surge in a short period of time. This pattern has occurred 4 times since January 2000, as shown in the accompanying chart. Silver demand set records across all categories last year, including industrial demand. Industrial offtake accounts for roughly half of the global demand and is expected to increase in the coming years due to the continued emphasis on green energy. Silver is an essential component in solar panels, and according to a study by scientists at the University of New South Wales, solar manufacturers are projected to require over 20% of the current annual silver supply by 2027. By 2050, solar panel production is estimated to consume approximately 85 to 98% of the current global silver reserves. On the supply side, silver production remained stagnant last year and is expected to remain flat in 2023. This, combined with record global silver demand, contributed to a market deficit of 237.7 million ounces last year, marking the second consecutive annual deficit. The Silver Institute described it as possibly the most significant deficit on record, and emphasized that the cumulative shortfalls of the past 2 years outweighed the cumulative surpluses of the previous 11 years. Considering the supply and demand fundamentals, along with Citigroup's analysis, it appears that this could be an opportune time to consider investing in silver. The projected $30 mark within the next 6 to 12 months, as suggested by Citigroup, aligns with their anticipation of U.S. growth rollover and a decrease in interest rates and real yields. Furthermore, the bullish signs, such as the historically wide silver-gold ratio and the increasing industrial demand for silver in the context of renewable energy, further support the potential for silver's future performance. However, it is important to remember that predictions and projections in the financial markets are subject to various factors and uncertainties. Market conditions can change rapidly, and there are always risks associated with any investment. Therefore, it is advisable for individuals to conduct thorough research, consult with financial professionals, and make informed decisions based on their own risk tolerance and investment goals. Please share your thoughts and predictions on the future of silver and whether you believe it will reach the projected $30 mark within the next 6 to 12 months in the comments section below.